It's time for the Orange Weekly with Howls and Growls.
Hi, I'm Sats Howls.
And I'm Naka Growls.
Together
we
we're
are
Howls and
Growls.
Welcome back, dogs, and a happy new year. Let's dig into the stories starting to shape the Bitcoin economy of 2026. In this week's Bitcoin Bulletin, Bitcoin tops $93,000 following US operation in Venezuela. ETF trading volume surpasses $2 trillion. We celebrate Bitcoin's birthday as the network turns 17. The miner profitability squeeze sees moves into AI. And lastly, we ask the question on everyone's mind. Is the 4-year cycle broken?
Meanwhile, on the programmable side of the fence. Despite the general struggle against Bitcoin dominance, Stacks defied market trends with a 14% weekly gain. Circle's native USDHx integration is officially live. KuCoin token trading overhaul set for January 9th. We report on the shadow effect, as Stacks is mentioned as a Bitcoin growth proxy. And lastly, the Stacks blockchain honors its finest with the 2025 Stackies Awards.
Let's dig. The first week of 2026 has been a period of intense geopolitical volatility and strategic realignment, as Bitcoin surged past the $93,000 mark early this week, as global markets reacted to the US military operation in Venezuela and the subsequent capture of Nicolas Maduro. While traditional safe havens like gold jumped to over $4,400, Bitcoin once again acted as a digital gold proxy, absorbing capital from investors seeking an exit from the geopolitical instability. Analysts noted that the rally was supported by an absence of selling from miners and family offices, despite the broader everything rally in Asian equity markets. Meanwhile, US spot Bitcoin ETFs hit a historic milestone on January 3rd, with cumulative trading volume officially crossing $2 trillion. Remarkably, the second trillion was achieved in half the time it took to reach the first, highlighting a massive acceleration in institutional adoption. On January 2nd alone, investors poured $471 million into these funds, the highest single-day inflow since November. Something of a gift, perhaps, as the following day, on January 3rd, the network celebrated its 17th anniversary, Genesis Block Day, with a clean bill of health that defied many skeptics. Despite the 2024 halving having cut rewards significantly, the network has transitioned into a fee-reliant security model more smoothly than some predicted. The anniversary data showed that transaction fees now consistently account for a larger share of miner revenue, proving that the Layer 2 ecosystem, like Stacks and Lightning, is successfully driving the on-chain demand necessary to secure the network long-term without relying solely on the block subsidy. However, on the flip side, Bitcoin miners are facing the harshest economic conditions on record. While the network hash rate stabilized above the symbolic 1 zettahash per second mark, rising difficulty and energy costs have squeezed margins to near zero for all but the most efficient operators. In response, major firms like Mara Holdings are reportedly accelerating their pivot into AI data centers, unplugging older mining rigs to repurpose infrastructure for more profitable high-performance computing. Lastly, as 2026 begins, market analysts are declaring the traditional 4-year halving cycle effectively broken. Institutional money, which now dominates market structure, has led to a more deliberate and less emotional price discovery process. Strategic outlooks from BlackRock and Fidelity suggest that 2026 will be defined by nation-state adoption and the integration of Bitcoin into sovereign treasuries, moving the asset further away from its retail-driven, speculative roots toward a role as a permanent global reserve asset.
Thank you, Sats. Our Stacks Bulletin begins with some bullish momentum, which saw STX emerge as a top performer, recording a 14.1% gain over the last 7 days. Trading volume spiked over 450% in a single 24-hour period, driven by a combination of a bullish technical breakout and growing institutional confidence. Despite a brief sell-off late in the week, STX has maintained its position above key moving averages, signaling strong buyer conviction. Responsible in part for the vote of confidence, not to mention, a major win for Bitcoin DeFi. The integration between Stacks and Circle's X Reserve protocol moved into its full operational phase this week. The launch of USDCX, a 1.1 USDC-backed stablecoin native to the Stacks L2, is already transforming the network's economy. This integration allows for non-custodial, BTC-backed loans and deepens liquidity across Stacks, directly addressing the historic liquidity bottleneck that has hampered Bitcoin native finance. In other news, the crypto community received a brief jolt this week as KuCoin announced it would delist several tokens, including Stacks, from its cross-margin trading services effective January 9, 2026. While the move is part of the exchange's routine risk management and does not affect spot trading, it triggered a temporary wave of volatility as leveraged traders unwound positions. Next up, as market participants shift their focus toward long-term network fundamentals, Stacks has been mentioned as a top-tier asset for investors seeking exposure to Bitcoin-linked growth. Positioned as the leading Layer 2 solution for the Bitcoin ecosystem, Stacks is uniquely tethered to the original cryptocurrency's success, offering a way to deploy smart contracts and decentralized applications while benefiting from the security and visibility of the Bitcoin base layer. The article on Crypto Newsland suggests that Stacks is positioned to benefit from institutional capital flows into Bitcoin native infrastructure. By providing the essential programmability layer for Bitcoin, Stacks is increasingly viewed not just as an altcoin, but as a direct leverage play on the expansion of the entire Bitcoin economy in 2026. Last but not least, the Stacks community gathered this week to celebrate its most impactful contributors through the annual Stackies Awards, highlighting the projects and individuals who transformed the network over the past year. Hermetica was crowned the favorite Stacks project of 2025, while Bitflow Finance was signaled as the project to watch in 2026, reflecting high expectations for its upcoming liquidity solutions. STX Tools, aka Tenero, solidified its position as the network's most essential utility by winning the most used tool category. The awards also captured the community's excitement for major technical shifts, with dual stacking officially named the favorite Stacks announcement for its role in revolutionizing Bitcoin native yield. Individual honors recognized the influencers of the ecosystem, as GPSC received the award for Most Positive Community Impact, Rafikoshi was celebrated as the Unsung Indie Builder, and Jack Binswitch was honored as the Most Inspiring Thought Leader. These awards underscore the vibrant, decentralized talent driving the expansion of Bitcoin's utility.
And that wraps up the Orange Weekly. Remember to share with the pack, keep your noses to the ground, and your ears pricked so you never miss a beat. Until next week, may your walks be long.
And your treats be plenty.